All right. Hi, everyone. Okay, so we're going to be talking about Treasury Management today. I'm going to ask the speakers to introduce themselves. I'm going to first introduce myself, and then we're going to get on with the questions. Throughout the panel, you have any questions, feel free to raise your hand. At some point, we'll get to the questions. And if... No, you can't text me, but it's fine. All right, so my name is Tadeo. I used to be a contributor of Make a DAO, community facilitator for the data analytics unit and also for Spark. And in a previous life, I was advising Fortune 500 treasuries with their FX and other financial menagerie. Please, Oxytocin.
Yeah, I guess I'll go next. Hey everyone, I'm Oxy. I'm the head of governance at Paraswap DAO. Additionally, I'm a delegate at Optimism and Arbitrum. I'm so happy to be here and really looking forward to dishing out some paneling. Any answer that might be controversial, I'm going to blame it on my jet lag.
Hi, I'm Alice. I'm part of the governance team at Karpatkey. I'm also Arbitrum delegate, and I am part of the Uniswap Accountability Committee. And I was part of the Uniswap Treasury Working Group.
Hey everyone, my name is Juan. I'm Kleros Treasury Manager since around 3 years. And yeah, I'm a Ethereum researcher and building some stuff in DeFi. So yeah, I'm not a governance expert, but more in the treasury management side. So yeah, that's it.
And to Juan's point, we have a treasurer on the side and we have a governance experts for treasuries on this side. So I'm going to be splitting the questions between those two groups. So just to start off with Juan, if you could just give us a brief overview of what is treasury management, or what does it mean?
Yeah, so the TLDR is could be defined as you have a treasury and you want to maximize the capital efficiency of the treasury to preserve the capital, but also make it like working capital, and how to use that capital to fulfill like the obligations of your client, you could say. Either it's an internal company or like external, etc.
Sweet. So now over to Alice and Oxytocin. You can choose who starts first. But the question here is going to be, why do DAOs need treasury managing?
I mean, I don't think they actually must have it. It's just a cost opportunity of not having it, in the sense that you have somewhat relevant amount of assets there in the treasury, and you can either choose to leave them there and exposed to volatility, because most times those assets are, like those treasuries are mostly in the native asset of the token. So you have like huge volatility and you are exposed to the market. Or you can choose to leverage those funds and put them to use to reach your goals. So based on, of course, different projects have, and different DAOs have different goals. That could be like growing the ecosystem or just, getting some non-operating revenues. And treasury management helps with that. So I don't think it's, it's a must-have. It's more like, what's the cost of not doing it?
Lovely. Oxytocin, anything to counter?
Yeah,
fight?
I basically try to, first of all, I really agree about the point of something being essential, because I feel that like many DAOs are way too eager to jump to the point of having a treasury. Like, okay, we just made a snapshot. We have like 5 whole members voting in it. Let's go now and make a treasury team, which is not the case. I'd say that like the best point is when you start seeing treasury management kind of as like housekeeping. When you start having like so many different assets that you have to be dealing with, so many different teams and initiatives that have to be moved from one place to another, so many different wallets, especially, so many different multisigs. The moment you start like really having all of these things running in parallel, I'd say that's when you need a treasury management, because otherwise, imagine having to make a vote for, I like to say like voting for the napkins. Like you're making a party and you have to be voting like what kind of napkin do you want? Do you want to get what kind of drink? And that's what the treasury management is supposed to be doing, not making every single voter go like, should we get Pepsi or should we get Coke?
Lovely. So to that point, Juan, might be a question about employability, but what do you feel you and your team does better than a whole community with direct democracy could do?
Yeah, so, and like just for some context, like Kleros is run by a cooperative in France, and that means that we have the possibility of the cooperative managing the funds, and all the management of the funds is doing in behalf of the company, and like with the aim of support Kleros growth, right? And Kleros growth is like extremely tied to Ethereum ecosystem, and it means that we are reliant on Ethereum in Ether, the asset. So we don't rely on having the DAO deciding on treasury management. Besides, there could be a proposal on how to spend certain assets, but the whole decision is internal, and we have our own framework. The whole objective is to run what we call like the best risk-adjusted strategies out there, like while fostering like Ethereum values and decentralization ethos of the whole community. So trying to get an equilibrium between those and not needing to deal, like for example, other certain services providers, like for example, Karpatkey is great because they can manage your treasury and give you like services like on what your like company needs in terms of ecosystem and everything. Us not needing to focus on do all those strategies also enable you maybe to get better risk-adjusted returns, or depending on how you look at it, because it's subjective. But yeah, I will say that we are only focused on the returns and preserving capital in that way.
Okay, good point. So basically, the idea is you need to professionalize. You have to have a professional team running your treasury in order to be fully aligned in long-term goals.
Yeah, I mean, okay, for sure you will need. In our case, it's like only me and the co-founder of Kleros, like looking into the strategy since like 2 years, and that means that we don't have we have like monthly reports, but we don't have all like the added value like other services providers have in terms of like being that present in governance, having reports like into the detail all time. But yeah, like you can have different approaches, and that imply different trade-offs. So depending how deep you want to go.
Okay, and then bringing back the question to you guys, is there a balance between the professional treasury team and governance in the decision making of what you do with the DAOs funds?
You want to start? Yeah, well, I mean, sometimes I feel that like treasury management is seen as this big, scary, shadowy part of a DAO, because there's, at the end of the day, kind of like I don't want to say conflict, but it's kind of like they are in a very two different sides of the table when it comes to negotiating. On one hand, treasury management, they want to be keeping the most assets possible, keeping them managed in different positions, which sometimes may not be immediately liquid if you're doing like more of a long-term kind of solution. Meanwhile, DAOs usually lean more into like, let's spend more, let's start this new initiative. Let's go and like do this whole new thing that hasn't been tested, which is obviously like that's the part that makes DAOs fun. But I'd say that's the middle point where, going back to the question you said, sorry, I've been giving you my back all this time, but I feel that like voting is required basically to like give this periodic reassurance that like these two opposing teams are still on the same page. Like, do you still agree with the strategies that I'm making? Do you still believe that like these kind of initiatives are worth running? Do you think that these kind of things like maybe should be afforded? Because we've spoken already about like what happens when you don't have a treasury team, or you have a treasury team that comes way too early. But another one that I feel like it's usually neglected is the idea of you have a treasury team, they have a big power, and then like people kind of like forget about them, and nobody knows what's happening with them. And then like a few months after they come back and they're like, oh, by the way, something happened and we've only reported it now. Again, I'm not here to point fingers, so it's just like trying to keep these things in mind. But that's why I think we need like these regular votes, even if the vote is, let's not change anything.
Yeah, I mean, I think this is like one point, and I do agree that from time to time you need some sort of check-in. I think another point is like what's the balance between the active treasury management that is independent and a decentralized DAO, which is decentralized by nature. And so like this is a controversial one, and we've explored this, for example, in the Uniswap Treasury Working Group. And like the point is maybe like the immediate thinking could be, oh, like we want full decentralization because this is what's supposed to be, because we are a DAO. But then if you think about it, we go back to your napkin example. Like you don't really want to, you know, like waste a lot of resources and time of delegates and the DAO to decide on every single small thing. And also sometimes you really need to act quickly and you don't really have the time to wait for a DAO vote. Imagine like a hack or things like that. And on the other side, of course, you have treasury managers, which ideally would want to be independent because it's more efficient. So the point is, what's the good balance between operational efficiency and decentralization? And I mean, I think what we do at Karpatkey is close to being a good balance because, for example, we have like regular votes and check-ins to make sure that like our operations are aligned with what the DAO wants and with where the project is going. But also we, like the infrastructure that we use, make sure that the DAO has full control over the funds, they can get them back, and we can only like operate with pre-approved a pre-approved set of operations that the DAO has approved. So it's not like we can do whatever we want. We can just, you know, operate in line with what the DAO decided. I think that's a good balance.
Yeah, nice, like a true non-custodial treasury.
Yes.
And to summarize your points from both of you, if I say that you basically leading to a point where like governance should be done by consent when it comes to treasury, you should let's say delegate the responsibility down to the treasury team rather than by consensus of voting everything. That's kind of accurate. Do you like that statement? You want to fight me on this?
I mean, yeah, it's final. Let's get fighting. But I'd say that like we're also assuming something from delegates. I'm now taking the other side of my own opinion to try to get the panel going. We assume that delegates don't want to be voting on all these things. And sometimes there's things that are kind of taken for granted whenever these strategies are being managed, like choosing the assets or choosing the level of risk. Something that I wanted to add myself is that, like, honestly, one of the biggest, like, underrated points of having a treasury management team has to do with governance burnout.
Governance what?
Burnout.
Ah.
So usually, like now, we've kind of been moving to more professional structures when it comes to DAOs. You have like these kind of meta-governance teams that are like executing the operations. But many DAOs are still like managed by the community. And if you want to be decentralized, you want as many different interest groups and community members taking part on the day-to-day operations. So I'm going to say something that's a bit paradoxical, but I feel that like taking these votes away from control from the DAO might actually help on the long-term health of the DAO, because if you make people come back every 2 days to be like, do you want to swap this for this? Do you want to restart this thing for that? Some members will love it, the ones that stay like 10% that want this max control. But so many members will just get tired of like waking up every morning and having to sign like 20 different transactions to get them going. And you lose all these potential community members, just keeping them engaged. And you lose all these potential people that like maybe they like your project, maybe they like your DAO, but they don't like doing this unpaid work of like checking all these things and making sure they make sense. So I don't know, for me at least, take a bit of control to make sure that people don't get exhausted. But I don't know how you see it on the other side of the equation.
No, I do agree. I do agree. And I also think that sometimes, for example, people, I mean, not everyone is financially educated enough to be able to make sure, like, or to understand what a good decision is. Like, I mean, there are things that may be, like, easier to understand, but sometimes you have more complex actions that you need to perform in treasury management operations, and like you need to have a good understanding of how like the technical infrastructure works, how the financial part works, and I mean not everyone has this knowledge by nature. So I think that asking to every delegate to participate in every single decision on this defeats the purpose of having, you know, professional treasury management, like acting for you. That's like the point of appointing a treasury manager is that you are appointing someone that knows best. I think that's in general, not just about treasury management.
Can I make a brief follow-up question?
Of course.
Like, this is more of a higher level. I don't know how much you get involved in like the daily, like DAO votes operations, but like what you were saying now makes me feel like this is probably something that happens often. Like, how do you avoid going to the community and like avoiding like this, like we know better than you thing, like this gap in information? Like, is there something that like can be done to make sure that like you handle operations without feeling that like you're taking control away from the DAO with these operations?
I mean, I think as Karpatkey, we go back to the DAO quite often in the sense that, I mean, for example, just now we have like a proposal in SAFE, and we already have like treasury management mandate for the Gnosis SAFE joint treasury. So we could literally do that, but we are still going back to the DAO because it's slightly different than the initial plan. So I feel like we go back to the DAO quite often.
So you go back to the DAO to be transparent in reporting, or to have them vote on a path?
I mean, we do reporting monthly, and then every 6 months we do a bigger report. And then with some DAOs, we literally go back for reapproval of our mandate every X amount of months. But also, for example, in this case, it's to enable like an incentives initiative. So that's like slightly different than our initial mandate. It's still, we still think it makes sense, but we are going back to the DAO again to ask for their approval. So I feel like in our case, we go back to the DAO quite often, while at the same time not losing operational efficiency. For example, we wouldn't go back to the DAO for every time we need to rebalance a pool. That doesn't make sense. Also, the voting process is like 1 month. So, you know, it's not efficient and not viable.
Fantastic. I want to hear more from Juan. Particularly, I think I like this comparison of having Karpatkey as being a treasury manager for multiple DAOs, while Juan's team is treasury manager for a single DAO. I want to ask like how the day-to-day compares, but more importantly, like what sort of strategies you're implementing for Kleros, and if you're looking at a different DAO, would you change those, or it's simply everyone should kind of follow the same strategy alignment?
Yeah, so for Kleros itself, and then to enter into other DAOs, basically, as I mentioned, we run a portfolio that is Ether, like I would say 70% Ether. So what we do is we know that we are long-term aligned with the Ethereum ecosystem, and like that translates into Ether, the asset, and we have for the short term, like 1 year, 1.5 years, like stables to be able to have the RAM1, and then we'll have a very big for like at least a company like Kleros, and like in the average crypto like treasury, like around like $23 million, in which on ETH, in which $25 million, I would say like 70% that is ETH. So we run strategies without impermanent loss to be able to get all the upside in the long term of ETH, while also being able to fulfill like daily operations and being like 100% capital efficient and covers those in like less amount of transactions. In regards to the daily operations itself, basically we have what we call like a risk-adjusted APY framework, in which we estimate what's the risk for a strategy, and we compare with the actual market APR of a strategy. The estimation of the risk is subjective. You cannot give an objective number of what's the risk, because you can ponderate what's the link effects of how many months this smart contract is live versus like if there's a vector of attacking governance, or what's the liquidity on the secondary market of this LP. And then like you compare with an objective metric that is, okay, what's the amount of APR that this strategy is yielding? And also like you need to have like a lot of things in consideration. Like you need to talk with the teams, or like providing like those yields, let's say, and like if there's an incentive program, like how long it will last, because if you have like a very big size and you want to enter for like one week, and this applies for every size actually, like it doesn't make sense, the swap fee for entering the position and then rebalancing. The same like more lower level things, like for example if you're swapping, like if you're swapping and you go like you are a treasury manager and you swap in certain front ends, you like have 30 BPS extra just for swapping on certain front ends. So being careful with that. And lastly, what like we're pretty proud of is not only having what we think is the better risk-adjusted returns, but also like better like risk-adjusted returns while being like aligned to Ethereum values. That's why we are all here, right? So, for instance, let's say when there was discussion on, hey, GEF execution client is like 70%, and what's the risk this implies for the whole ecosystem? And we go to talk with different LSTs providers, LRT providers, in that moment only LSTs. So what's your current execution client and diversity? Like, and trying to only support and like those execution clients that were running minority clients at a certain moment in time. Same with like if an LST is like at certain moment in time, like majority over 33%. Like start to supporting minority LSTs, obviously when the measuring the risk of that LST, etc. And yeah, like I mean, if you want to like go beyond, you can think of, okay, for the Ethereum community itself, it's important that layer 2s that are getting a lot of traction actually enter stage 2, and they make efforts to enter stage 2, like and elevate the standard and the end of the industry. So like from next year onwards, only like start to deploying if strategies without impermanent loss on those layer. Like you can check in L2Bit, like which chains and stage 2, or like talk with the team, like how close do you see? So basically aligning, having a big panorama of what's the market, what's the risk of each strategy, and also trying to keep this equilibrium between having the best risk-adjusted returns while seeing how can you contribute like to the Ethereum ecosystem.
Nice. And essentially, in a way, with Kleros, fund voting without money, voting on client diversity.
Yeah. Like we are lucky enough to have a pretty big treasury, so that means it might have like some implicances. So some LSTs, if we talk like this important, and we can talk like for example with Karpatkey or like other that also is aligned with these values, and we transmit this to the LST providers and make them understand why, and like maybe have impact on certain decisions.
Fantastic. And this is a perfect segue to grabbing the governance people and asking them what is unique value proposition from treasury teams towards governance? What can you benefit the DAO itself by what you know and what you do?
Yeah, I mean, I don't see them as necessarily related, like governance and treasury management. Of course, like being involved in governance also benefits treasury management in the sense that, I mean, whenever you do asset management, even if it's not for a treasury, you need to be aligned with the project, because like the project still has goal that it wants to reach. So as a treasury management, you need to make sure that your operations are in line with the goals of that project. And being part of governance can help with that, in the sense that being part of governance requires you to be actively involved with the community. It requires you to chat with the community and to know what's going on, to know what the goals are, know what the initiatives are. So in a sense, you benefit as a treasury management to also, work in governance. But I don't think there's like a direct relation where you cannot be a treasury management unless you work in governance for that specific project.
So I agree with you, but just to make a panel, I'm gonna pretend that I don't. And
Thank you so much.
I'm gonna say that like I disagree for the sole reason that like many treasury management teams, obviously, since they're a service, they work for different DAOs and different organizations. And I feel that like if you don't have a governance presence in that system that you're managing, it's possible that at least the DAO could believe that like you're not actually aligned with the assets that you're managing. So for example, I know some of the projects that you work with, like thank you for my noses pay cashback, but let's say that like you have like two different projects that are like working, like they're not competitors, but they're close enough to be competitors, and you're managing both assets. If you don't have a governance presence in both of them, if you only have it in one of them, or even worse, if you have it in neither, there's no way to know if you're actually working in the best interests of the people you're managing, isn't there?
Yeah, I mean, yes and no, in the sense that in the end, like as a treasury manager, you still need to report back to the DAO and show them like that you have results and results that align with the project. So if the goal of the project is to, you know, like not to be exposed to too much risk while still preserving funds, like you cannot like go and get like 50% yield on whatever pool. So, and that's like, whether you are part of governance or not, you still need to, you know, be responsible about that and go back to the DAO and report back to them on what you did. So I do agree that having a governance presence is definitely helpful for treasury management, but I still think that if you operate treasury management like responsibly, you still need to be transparent and in line with the DAO. Otherwise, you're just doing whatever and you're not really serving the DAO that you are serving.
Full
You agree with
transparency.
me now?
I lost a little pen. Okay, actually, this allows me to ping pong back to Juan on a point. Again, a couple of years ago, I was doing treasury management at large corporations, very different beast to what it is in crypto in general. Is there anything that you see that, I mean, they do a lot of things right and a lot of things wrong. Any good practices from traditional treasury management that you think crypto hasn't caught up with it?
Yeah, so, okay, one of the things, first, I used to also use a lot of traditional finance benchmark, and I like sadly see that at least when you analyze fundamentally projects in crypto versus like traditional finance, like the metrics and the impact on price and everything is totally different. So beyond that I find is interesting, and I hope it catch up like in the long term, because it's like, yeah, more interesting to like to value something. I would say like some treasury management aspects that like are very used like in traditional finance. Well, we have seen some examples of like, for example, the importance of like zero coupon bonds in TradFi and how this reflects like in DeFi that we have seen it with like Pendle. Then we can see like what's the option derivative volume and how professional treasury management use derivatives like to use their management. And I think that also will grow like exponentially, and maybe we have like some liquidity fragmentation that is a problem, and we have some technical implications, but for example like options puts is something like I think that needs the ecosystem to evolve. And there are a couple of teams like Panoptic Gamma, so they're really interesting projects like to take a look like to how they're building and how they're aiming to build this, and it's 100% useful like for treasury management. We have their own protocol on liquidity, and you have like a lot of native tokens, so that's like one of the things I'm more bullish. And then like something I'm disappointed today is that like you, as a treasury manager, like say like 1 year and a half ago, like we saw very good risk-adjusted returns on on certain strategy, and we allocate capital. But for risk diversification, I can't expose my portfolio to certain amount of assets in this protocol. And besides how good I see the returns on that asset, because it allows me no impermanent loss, etc. And so we went to buy insurance, and there was no size on insurance, so no pricing. And there's like nothing can be built to solve it, so that's another thing that will be built like soon, I think.
Okay, I'm gonna, if anyone wants to make a final comment or a final statement, and then we're gonna open the questions to the floor, the audience. Brace yourselves, I think.
I will add something like in the last point, because I'm seeing now like the gauntlet there, like, and when you talk about risk curators and governance, that's something that in traditional finance there's no match. Yeah, you have like Yahoo Finance posts, like Bloomberg posts, everything, but you don't have like risk curators making their like information public, sharing with the community. And beyond, like when I started in treasury management like 3 years ago, and there was like no one cared about it and much, and there was no more information. And like I made all the research by myself. And today also like it's still being that way, but you have like way more tooling on all these risk curators like that you have in different DAOs that make the information public and like enables like the community to have like a wider vision of like of the risk of certain project. And it's something that I think that we have in DeFi that is not that present in TradFi, and it's awesome. So yeah.
Nice.
I just had a final point I wanted to ask, like, more to the treasury managers here. We've been talking here about, like, every time you go back to a DAO, like, having accountability and making sure that everyone is happy. Obviously, when things go well, it's pretty easy. The vote passes, kumbaya. But, like, I'm curious, like, is there usually... Do you know any example of when things didn't go that way? Like, any... Maybe from other managers or other protocols where, like, people said, like, no, we don't want this. Stop it, change it. Like, usually what tends to be like the hottest contention point when you go back to the community? Is it like you're dealing with this asset, you're using too much leverage, or what are usually these kind of points that like make more back and forth happen with the DAO?
I mean, I would say, honestly, it's the initial part. So actually, like, when, like, understanding whether a DAO wants treasury management at all or not, in the sense that, and I would say, for example, like treasury diversification, it's underappreciated in the sense that, like, there are still various DAOs that, like, want to just keep the assets in the native token because for whatever reason, like they believe the market will go up, or they want to just, spend in the native token. And that's a decision, of course. It's just that, it of course, the fact that you have the whole treasury in a single asset has certain risks that a diversified portfolio doesn't have, or at least has like a lower amount. So I think one of the main points of controversy is actually the initial part of understanding whether you actually, whether a DAO actually wants treasury management over their treasury, and specifically decide if they decide they want it. Understanding, for example, like the diversification aspect. It's a controversial point where I've seen many people say that they don't want it. They just want to keep and spend the native asset. So I think that's definitely like a challenge that we still see.
Yeah, I think like on that point, I don't have much experience on like feedback of the community and need to respond to a community. Besides, we can and we do sometimes. But I think that if you're like needing to deal with a treasury, like in which you need to give other services and treasury management, and you need to, for example, foster other communities, you might need to like deploy capital on certain protocols that maybe it's not the best risk-adjusted returns. And I think there's probably like when the community could come and say, you, hey, like maybe you're deploying here because like you're like trying to fostering these decks, but actually like check how this like the formula they use like in these other decks that allows you to reduce LBR or whatever. Like, so I think that's like something that is hard to manage, and is something that I personally like wouldn't like to opt in much if your goal is like just to maximize risk-adjusted returns, right? So it's like a balance, and that's why you have different people building on different stuff and so on.
Nice. Fantastic. Does our lovely audience have any questions for our panelists? I see a hand there, I see a few hands.
We have one here.
Fantastic.
Yeah, a question to Juan. So you mentioned that you like making, or you can get the better risk-adjusted reward. But in the end, you're running the treasury of a DAO. You're not running a hedge fund. So,
yeah.
So my point is that the goal is not to maximize return; it's to support the DAO's goals. So how do you cover against some risk, like smart contract risk, that you're exposing yourself by deploying in these strategies?
So that's why when I say risk-adjusted returns is like going back to the framework in which we estimate the risk, and that estimation of the risk makes that also includes preserving capital. What I mean with that is I don't support like the idea of like I will just like LP I'm managing a treasury and just LP, I don't know, like in Uniswap because it's like the most battle tested like protocol, and I will just deploy there because I don't want to understand how other protocols work and what are the implications of that. If your final answer is like, let's say I only provide liquidity on Uniswap, and might be the right answer, but what I refer to is that the process of why you arrived at that conclusion should be like different, and should be what's the actual risk of a certain strategy and like what's the certain return. Like, and in going to Kleros, like yeah, we like actually the mandate of the treasury we manage is legally like be able to support Kleros like development and be able like everything we do like to support Kleros development, and that implies like Ethereum ecosystem. So it's like preserving capital while having research as returns and taking in consideration like that indeed that estimation of risk you are trying to preserve capital as like the mandate, and no, it's not simply like good looking for the best returns, because if not, if I look for the best returns, then maybe like and yeah, you have like a ton of stuff, but you can see in our reports that we are not aping into like something that is new, like maybe 100% APR, like or with permanent loss, etc. So
No meme coins?
no meme coins, sadly. No meme coins.
How unfortunate. Great. Any other questions? I think I saw a hand over here. There's quite a few. Go there.
Hey. Just talk.
Hey. Hey. Oh.
Louder.
Okay. So I've been understanding the definition of treasury management in terms of preservation, but do you think treasury management is not also related to fundraising? And the same way that we've seen professional treasury management teams, there are also professional fundraising teams that can do like grant as a service, or like manage not only preserve a portfolio, but actually create one for a project. So yeah, do you think that treasury management can be also something that includes this fundraising and grants as a service? Or do you think that there are two different things, and that a DAO should have a treasury management team and a fundraising team? Or the treasury management team is something that can be hired as a third party to cover both needs?
Yeah, I think the treasury manager can also be the fundraiser and help with fundraising, specifically because I think that they are very related. So, for example, if you need to diversify like your assets, it's implied that you also need to sell whatever asset you already have to get that diversification. So, I mean, it is definitely related to fundraising as well. And I do think that fundraising should be either part of treasury management when like that's aligned with the project goals, or if it's a separate thing, it should definitely be a cohesive strategy done with treasury management. So I think that also falls into having a single treasury manager or multiple treasury managers, where ideally having a single one, it's more cohesive and more efficient strategically. If you have multiple ones, it's inherently more inefficient. And if you decide to have multiple ones, you really need to make sure that they are working towards the same goal. Because, for example, if you have a fundraising team and the treasury management team that are different and they're working towards different goals, then, I mean, it's a mess. It's not just inefficient, it's just they're literally working towards different goals. And this is like, this creates inefficiencies and potentially losses as well. And for grants, same thing. I think that's slightly different. But again, I think treasury management could serve grants as well, because grants are just, you know, costs for the DAO. And so it should definitely be, like, again, a cohesive strategy where if you are issuing grants, you are having operating costs for the DAO that you somehow need to account for when you do treasury management operations.
Counterpoint?
Keep them separate, keep them in different rooms, only make them speak to each other with the forums. I understand the points that were raised before with efficiency, but I feel that like especially decentralized structures are inefficient by nature, and there's going to be a lot of things that are going to be costing a lot more just for the cost of decentralization. And this is my personal opinion, not financial advice, not DAO advice, but I already feel that like treasury management already has a lot of power within a DAO. They already have like the ability of like what strategies they have to be making, like what kind of diversification strategies have to be done, and giving them other like very major powers. Obviously, it would be more efficient to also have the same team allocating for different initiatives or like doing different ventures, but by separating them, by making like different positions on the DAOs, you get to have like much more equalized balance of power, especially like if you have like different goals set up for each one and each one having like a different mission, then it still goes back to this like balance of powers within a DAO. I feel that like if you want the original treasury manager to also be a service provider for grants or for venture investments, it sounds extremely bureaucratic solution, but you could make multiple places open and allow people to apply into more than one position, because that means that the token holders are happy to be having them in these multiple positions. And I feel it's very important to have them isolated like this as well, because if you put them all together as one, then if the service providers may be like a good treasury management, but not as good of a grants provider, you're kind of like hoping that they stick with one of them. Like, yeah, they're both tied basically. So I don't know. It's better that you keep fighting for both job positions as opposed to just like keeping them chained together.
You know, I mean, I agree that it needs to be approved by the DAO. I agree on that. I just think that it needs to be cohesive. Otherwise, you're like working against yourself.
Which can also work. Like sometimes having separate approaches, like if the DAO is willing to allocate these things, like you have like 10,000 tokens and you're like, okay, 20 for strategy that goes in this direction, 20 strategy that goes in this direction. If that's what they want, let them vote on it. But I understand that it's not efficient, but it's the cost of decentralization.
Agree to disagree.
I'm loving
That's
this.
what a panel is.
Any other questions? Got one here.
Here,
Awesome.
first row.
Where would you get it? Okay.
Hello. Two questions. The first one is, what kind of metrics DAO need to accomplish before thinking a treasury management team? And the second one is how a treasury management team need to be evaluated to, to be aligned with the short and long-term objectives.
So this is more of a yardstick than anything else, but based on what I've seen in DAOs, a good rule of thumb is that like you should be feeling the need to have a treasury management team as opposed to I feel like we are a DAO, so we need a treasury management team. The two sound very similar, but like if you don't feel the pressure of managing a treasury, like sometimes creating one without much need ends up being a loss of resources and time for many people, because maybe like you have such a small treasury that like you're paying almost like your biggest expense might be the treasury team itself, and they don't even know what to do with the small treasury amount that they have. So for me at least, that's the biggest metric of like you need a treasury management team. So I don't know, you have like different things that like one person couldn't be tracking by itself. You have amounts that like you don't trust putting on a vote every single time. That could also be another one. Or the final metric, and I feel that's the one that like we all kind of agree here, is the time window. The moment you start making operations that like cannot be executed within whatever long it takes on your DAO to execute a vote, 1 week, 2 weeks, 1 month, that's when you need somebody to be abstracting the difficulties away. Like if all you do in your treasury is to like send from wallet A to wallet B, that's okay. But if you need them to be like swapping with a certain amount or be like withdrawing, be doing these things, then maybe that's when you also need a treasury management team, in my opinion.
Agree.
Fantastic. I really want to go over time, but I'm not seeing good faces. Can I go
Sorry,
over
guys,
time?
we don't have more
No?
time.
Just
Any
one
further
question.
debate?
I just see one question there. Just
Okay.
one more. Sir, Nick, is it?
I hope it's kind of short one. So Alice mentioned that they operate Treasury with pre-approved set of actions that DAO has a explicit approval for to Treasury Management team. So my question is, considering this information and that probably there are some clear rules which you follow as a Treasury Management team, should it be the Treasury Management a human or a smart contract?
Love it.
AI. Just kidding.
Well, it depends on what you want to achieve, in the sense that there are some operations that I think can be automated, and like we are exploring that, for example. But to be honest, today we don't have the infrastructure to make everything automated. That's a simple question. And then, sorry, a simple answer. And then there are benefits in having humans be treasury managers, specifically because, I mean, like the simple ones, again, can be automated, but then you have additional benefits on having humans as treasury managers. For example, let's say that you like a project's goal is growth. Then of course you can leverage the treasury to do that in automated ways, but also the fact that you have humans involved can give you like additional soft things that automation couldn't give you, like partnerships, for example, or the network and the ecosystem, onboarding new projects into your ecosystem, things like that. They cannot really be automated, and still they can be achieved by treasury management.
Just close off, Juan. Should you get replaced by AI smart contract?
I
Yeah.
hope not.
I will bet that no. Yeah. Now, actually, like the partnership things and like human contact is so key that yeah, I find it hard. You could have tools, but yeah, if I'm able to have some good contacts and I know that some if is entering a lending market and that lowers my borrow rate for the next week, I don't think a smart contract can say me that, or maybe AI can. I will eager to see how if it happens.
Fantastic. Well, thank you very much to everyone attending and our panelists and lovely host. Have a good day.
Let's go. Thank you very much, guys.